Moving on with the second part of our project here on FairBinaryOptions.com. The project is called Elliott waves, and basically how to use the Fibonacci tools expansion, both expansion and Fibonacci retracement when trading with Elliott waves. And on the first part, we lay down the principle of an impulsive move, 1, 2, 3, 4, 5, and the corrective ways to follow for that move. So we used the Fibonacci retracement in order to see the 100% retracement for the second wave, which will invalidate the whole move, and also the so-called litmus test, or the expansion for the third wave. That needs to go more than 161.8 when compared with the previous first one. And then what next? Well, it is a saying that usually the fourth wave is retracing within or between, or let's say the normal retracement level for the fourth wave, which is a corrective one, by the way, should be around 38.2 when compared with the previous third wave. So what one needs to do is to go and take Fibonacci retracement, measure the length of the whole third wave from here to here, and then by the time the fourth wave goes into the 38.2 area and 23.6, that is a nice place to go and buy call options, of course. And then you're looking for the fifth wave to be still an impulsive move to take the previous highs, and then the correction begins. What kind of a correction? Well, if the correction here begins with an impulsive move or a five-way structure of a lower degree, and the five-way structure to go like this, 1, 2, 3, 4, 5, so of a lower degree, then just like that, we know that the B wave is not possible to retrace more than 61.8, because it means that this ABC is going to be called a zigzag. So what to do? We take a Fibonacci retracement, and then we measure the length of wave A, and then when the market comes into 38.2, 50% and into this area, we only want to buy put options, because if we have a five-way structure for wave A, it means that it's going to be a zigzag, and the B wave is not possible to retrace more than 61.8. So just like that, we have a trade, and the expiration date should stay based on the time frame the analysis is made, and also based on what the let's say structure shows you. Either is a complex one, complex correction, or a simple one. Let's assume now that wave A here, on the other hand, was not an impulsive move, so not five-way structure, but it was a three-way structure. Well, then we should only stay long, or we should only buy call options until 61.8 level comes, because if wave A is a three-way structure, then the whole ABC is being called a flat, and in a flat the B wave is mandatory to retrace more than 61.8. And I would say that the examples can continue on and on and on and on, because Elliott waves is based on Fibonacci. So using these tools together is a great place to find support and resistance, or turning points in the market. And when you trade binary options, you have even one more advantage. Why? Let's assume that this is a five-way structure on the 4-hour chart, for example, like it is this one here on the Euro-US dollar. Well, you can even jiggle and play a bit with the expiration date, because you may choose a bigger expiration date in if you are not sure that the end of the wave A is here. So avoiding short-term expiration date based on an impulsive move is something that can be done. Thank you very much for being here. FairBinaryOptions.com. We end up here the Elliott waves with the Fibonacci for both impulsive and corrective moves. Bye bye.